Many of us have more debt than we can ever hope to repay. There is no hope. And going through the coronavirus shutdown of 2020 has only made it worse. We're in lockdown, so our incomes have dropped, and we use debt to survive, which makes our existing debt problem even worse. That's why a number of public figures are suggesting a radical and ancient solution: a debt jubilee. It's exactly what it sounds like. Debt gets wiped out. But how would that work, and what would be the effect on the economy? And would it actually solve our debt problem? I've got a lot of thoughts on that in this week's episode.
This is Debt Free in 30. Here's your host, Doug Hoyes.
It's easy to see why people are calling for a debt jubilee. Canadians are carrying a record level of debt, and while we're off work during the pandemic of 2020, many of us will resort to debt to cover our living expenses, so debt levels will continue to increase. Small businesses will take on debt to pay rent and other expenses, while they generate little or no revenue. Consumers, well, same thing. They'll take on additional debt to make their mortgage payment or pay rent and buy groceries and pay for necessities. Unfortunately, if your credit rating wasn't great to begin with, a lot of this debt will be high-interest debt like credit cards and high-interest installment loans and payday loans. Payment deferrals may help a bit in the short term, but that only adds to the debt load post-COVID-19. For some, the result will be an insurmountable amount of debt. It will be more debt than they will ever be able to repay. The math is sobering. The typical person who filed a consumer proposal or bankruptcy with Hoyes Michaelis before the downturn earned $2,690 per month after tax. But after paying for living expenses like rent, food, and transportation, they only had $264 left to service their debts. Here's the math problem. Their debts, at just under $59,000, required minimum interest payments of just over $1,200 per month. See the problem? It costs $1,200 a month to pay the interest, but my typical client only has $264 available to service their debt. And that only covers the interest. So even if they had $1,200 per month, they would never pay anything towards the principal. They would be in debt forever. And that's a problem, because if you have a lot of debt, you are less likely to get married and start a family or take the risk of starting a business. Excessive debt is not good for you, but it's also not good for society. And when debt grows so large that repayment would force the debtor into extreme financial hardship, a debt jubilee becomes a way to restore balance for both the borrower and society. Which brings us to the concept of a debt jubilee. A debt jubilee is not a new idea. In his book, And Forgive Them Their Debts, Lending, Foreclosure, and Redemption from Bronze Age Finance to the Jubilee Year, Michael Hudson, an economics professor, gives the history of the debt jubilee, which occurred on a regular basis starting around 2500 BC in Sumer in Mesopotamia, which is now southern Iraq, through to around 1600 BC in Babylonia, which is an area in present-day Iraq and Syria. It was not uncommon for a new ruler to take power and then declare a debt jubilee, wiping out debts. Why? Well, two reasons. First, you become very popular with the people if you cancel their debts. It's a great way to hold on to power. Second, the rulers realized that if citizens spent all of their efforts trying to repay old debts, they would not have the resources to pay new taxes. They would be stuck on their land earning money to pay old debts, so they couldn't leave and serve in the military. So it was in everyone's best interest to get rid of old debt. Now, of course, times were a bit different 4,000 years ago. Most debts were monies owed to the palace or the temple, and were often for back taxes or fees or rents on crown land. When a ruler declared a debt jubilee, he was canceling a debt owed to himself. A debt jubilee was not an entirely selfish act. It was in the best interest as the ruler to cancel those debts. And that's a key point. Most personal debts 4,000 years ago were not the result of actual loans. We aren't talking credit cards or HELOCs here. The ruler levied taxes or other fees, and if there was a drought or a flood and the farmer didn't have the money to pay those taxes and fees, they went into debt, and in many cases it was through no fault of their own. So it made sense to cancel those debts. You see the parallel to today? Student loans are a similar example. I want to better myself by going to college or university, but I don't have any savings, so I get a student loan. Is it my fault I had to get a student loan? Or is it debt that was incurred due to circumstances beyond my control, like a flood or a drought a few millennia ago? That's why many people think of student loan debt when they think of a debt jubilee. If you have a Canada student loan, your student debt is owed to the Canadian government. Tuition today is very expensive. If you don't get a full scholarship or if your parents can't help, you either don't go to school or you get a student loan. If you have a student loan debt and graduate in the middle of a coronavirus epidemic that closes most businesses and then a recession starts and no one is hiring, how are you supposed to make payments on your loan? It's very similar to the farmer from 4,000 years ago who lost his crop due to drought or flood and had no money. He couldn't pay the debt back through no fault of his own, just like many students today who can't repay their student loans through no fault of their own. It's easy to see how a debt jubilee is beneficial to student debtors. By giving students a break, they can have money to buy stuff like houses and have kids and make money and pay taxes, and that's good for society. The Canadian government has already stepped in with student loan deferrals and an interest freeze for graduates impacted by COVID-19. If the financial impact of the coronavirus lingers, could this not be extended to more lenient student loan forgiveness rules than exist today? Sure, it could, but there's an obvious problem with just wiping out student loan debt: the cost. The Canada Student Loans Program has around $20 billion in outstanding student loans. When you add in provincial student loans and private student debt, the total student debt is many tens of billions of dollars. Can we afford to forgive all student loan debt? Tens of billions of dollars is a lot of money that the government is expecting to recover. If that debt is written off, that may result in less money available to fund other programs without further increasing our national debt. The government is running a deficit to support businesses, workers, and students already. How much debt can the taxpayer afford to incur? How much do we want our taxes to go up in the future? Now, of course, many will say the cost isn't a problem. The government can borrow money at a very low interest rate, less than 1%. Even if the government borrows $200 billion at 1% interest, that's only $2 billion per year in interest. And if they issue 30-year bonds, that interest cost is locked in for 30 years. So what's the problem? Perhaps we never pay the debt back, but so what? The country will be here forever, so let's not worry about it, or so the thinking goes. We can debate the cost, and yes, I understand modern monetary theory, but even if we ignore the cost, there's another problem with a debt jubilee. Fairness. What exactly is fair? It depends on your perspective. If you graduated with no student loan debt, you don't think it's fair that someone else gets their debt forgiven. If your parents weren't rich, and you had no choice but to get a student loan, and you're much more likely to think a debt jubilee is fair and just. You had no choice. Debt was inevitable. That's student loans or debt owed to the government, but that's not where we owe most of our debt. Today, most of our debts are private loans like mortgages, HELOCs, credit cards, car loans, and payday loans. Private loans are not monies owed to the Crown or government. The lenders are banks, credit unions, and other private lenders. Although many banks and mortgage lenders are offering those temporarily unemployed or unable to work due to COVID-19 the ability to suspend mortgage payments for a short period, these private lenders won't simply forgive a debt like the rulers did 4,000 years ago. These accommodations are temporary. Deferrals help with cash flow, but in most cases, interest will continue. When debtors return to work, they'll face an even higher debt load. What happens if they still can't meet their debt obligations? Do we need a private debt jubilee? What happens if we write off a large amount of private debt? A liability owed by you is someone else's asset, like the banks. If your bank writes off your debt, the bank loses that money. But wait, you say, the banks can afford it. Well, the largest bank in Canada, the Royal Bank of Canada, has $426 billion in retail loans. RBC's total equity, what the bank is worth on paper, all of their assets less all of their liabilities, is $83 billion. So if there were a debt jubilee for retail loans, RBC would be wiped out many times over. Now, you may feel the banks deserve the loss, but who owns the banks? You do. The CPP Investment Board invests the Canada Pension Plan premiums you pay every paycheck. Guess how much they have invested in the Royal Bank? $555 million. And they have around $1.3 billion invested in the other four big banks. So if the banks get wiped out, your pension will be a lot less when you retire. The money won't be there. That's just one example. If you own a general purpose mutual fund, it's also invested in Canadian bank stocks. So if the banks get wiped out, you get wiped out. You own the bank through your CPP pension and your company pension and your mutual funds and ETFs and other investments. Destroying the bank is not good for you. And we are back to that tricky point of fairness. If you bought your home at the peak of the market and can't afford your mortgage payment, you might think it's, only fair for the bank to waive your payments while you're off work or not charge you any interest on interest. But if you speculated on a condo to rent out on Airbnb and the market has collapsed, should you get the same jubilee? Many experts would argue that we are already heading for a recession, and there is no doubt that COVID-19 is going to be the catalyst to a deep recession and maybe even a depression. Recessions are a normal part of the boom and bust economy. Some argue that our current downturn isn't a debt-driven recession. I'd say the reason or trigger doesn't matter. The outcomes will be the same. A whole lot of problem debt. American economist Hyman Minsky believed that instability in capitalism is inevitable. Capitalism encourages risk-taking and optimism, which leads to innovation, and that transforms both production and society itself. That's good. But as new technology is developed, there's an accelerating desire to invest in it. And we overinvest in it, and that leads to instability. Remember a few years ago when the government of Canada made marijuana legal? Well, everyone started investing in pot stocks, and they went up. But then they got too high, no pun intended, and then they crashed. That's a classic example of the boom and bust of capitalism. But that instability alone would not automatically cause a recession or a depression. If I invest too much and it doesn't work out, I lose my investment, but that's it. Minsky believes that what causes a recession is private debt. We borrow to invest and grow, and when it doesn't work out, we're left with debt. The economy recovers, but we carry some debt from one bust cycle to the next boom cycle. And over time, debt levels build and build. Why? Well, because in a growing economy, you can make more money if you use debt. It's called leverage, and everyone who's watched the real estate market this century understand exactly how it works. House prices start to go up. We don't want to miss out, so we start buying, initially funded by moderate lending, then more risky lending, and eventually over-the-top subprime lending. That's why so many people in Toronto and Vancouver turned their homes into ATMs. They felt wealthy. They levered against their perceived wealth, sometimes to invest in more real estate, sometimes to fund consumption. As I said earlier, the problem with a mortgage debt jubilee is whose mortgage payments do we forgive? It may seem fair to give relief to the millennial who purchased a home to live in during this crazy market and who is now paying monthly on a mortgage on a house that's underwater. Do we give the same relief to the guy down the street who levered his home equity to invest in 3 Airbnb condos in downtown Toronto? And of course, there's the issue of inequality. The bank benefits from high debt because they collect the interest. The borrower is worse off because they pay the interest, and as debt levels increase, that inequality increases. The haves see their wealth increase at the expense of the have-nots during a debt bubble. So what's the solution? Well, we can all agree that each human being on the planet is different, so we should be able to recognize that different situations require different solutions. That's how we do it now. If you have children, you can apply for the child tax benefit. If you don't have children, you can't. Is that unfair? No. Different situations require different solutions. Should you be able to collect the old age pension at the age of 22? No, we've decided that old age pensions are for people who have reached a certain age and presumably have a reduced ability to generate income. So we can all agree that a universal debt jubilee, where all debts get wiped out, regardless of circumstance, makes no sense. How do we decide who gets a debt jubilee and who doesn't? How do we decide who should get a full elimination of their debts and who only needs a bit of help, so they only need partial forgiveness? How can we set up a system to give relief to the people who need it, but not burden society by giving free money to people who don't need it? Well, you already know what I'm going to say. We already have a system. We've had the system in Canada for well over 100 years. All of the rules are contained in the big book, the Bankruptcy and Insolvency Act. If you think you have more debt than you can ever hope to repay, you can apply for a debt jubilee. The Bankruptcy and Insolvency Act already has the rules and guidelines in place to make a modern debt jubilee fair and equitable. The rules determine whether or not you get a debt jubilee, and if so, how much debt forgiveness you get. Everyone doesn't qualify. Only those who need it are eligible. Only those who are insolvent and can't repay their debts can have their debts forgiven. The concept of surplus income makes debt forgiveness fair between people with, different levels of income. If you're a working person doing your best but not earning enough to make ends meet, it makes sense that you would get close to full relief. If you're a doctor or a lawyer earning a good income, but you have a lot of debt because you invested in some business deal that went bad, you still have a good income, so you have to pay more into the process, and therefore you only get partial relief. Now, our current system isn't perfect. It's not totally fair. The way surplus income works is that the government says that a single person with no dependents in Canada in 2020 needs $2,243 per month to live. So if you earn more than that and you go bankrupt, you have to pay half of the amount you're over that limit into your bankruptcy estate, and those funds get distributed to your creditors. Well, that makes sense. A high-income earner pays more than someone with lower income. The problem is the limits don't make sense. Do you know how hard it is for a single person to live in downtown Toronto on $2,243 per month? I've got lots of clients who are paying close to $2,000 per month in rent, so that doesn't give them much to live on. If you want to make the debt jubilee offered by a bankruptcy more fair, the surplus income limits should be adjusted based on where you live. Expensive cities should have a higher limit than less expensive towns. Well, that would be more fair. There's another obvious example of inequity in our current debt jubilee system. If you owe money on a credit card or bank loan or payday loan or income taxes, you can go bankrupt and have your debt wiped out immediately. But if you have a government-guaranteed student loan, which you had to get because it was the only way you could go to school, and you haven't been able to get a job earning enough to pay it back, the law says you have to wait for 7 years before you can go bankrupt and have your student loan automatically discharged. Yep, you have to suffer for 7 years before you get relief. I believe that our current 7-year waiting rule for student loans is unjust, unfair, and easily fixable. I went to Ottawa 12 years ago and testified before the Senate Banking Committee that we should not unduly penalize students. If you can't pay back a loan that you had really no choice but to get, you should be able to get bankruptcy protection. I argued against what at the time was a 10-year rule. The government made it a 7-year rule, but I think at most it should be a 2-year rule, and I'd be fine with a 0-year rule, just like every other form of debt. That's a debt jubilee that would save a lot of suffering and would benefit society. My point is that if we want to extend the debt jubilee to more people, the mechanisms are there. Here's another example. If we feel that COVID-19 is an exceptional economic event, credit bureaus could shorten the period during which they retain written-off debts on credit reports. Although this may not really matter. I assume that post-COVID-19 lenders will be in the market to loan again, and they'll make their own decisions as to creditworthiness. My point is this. Any system must be perceived to be trustworthy and be administered in an equitable and unbiased manner. The only way to achieve that is through formal legislation like the Bankruptcy and Insolvency Act. We've already seen cases of debtors denied mortgage deferrals. Any debt jubilee program enacted by individual private lenders is fraught with complications and has the potential for both abuse and bias. So, okay, we all agree that instead of a one-size-fits-all debt jubilee, we only help the people who need help. Makes sense. But does that actually solve the problem? What is the actual problem? Professor Steve Keen, in his book, Can We Avoid Another Financial Crisis?, says that a modern debt jubilee would reset the clock and it would eliminate debt, but it would not solve the problem because we would just get into too much debt again. Capitalism is booms and busts. We borrow too much and can't pay it back. So to solve the problem of ever-increasing debt, Professor Keen says we need to eliminate speculative borrowing. It's good for society that if you want to start a daycare business, you should be able to go to the bank and borrow money to pay for a building or to fix up a building and to buy equipment and, whatever else you need to start the business. Borrowing for productive purposes is good. Entrepreneurial activity is good. It creates jobs and builds our wealth. The problem is that a lot of our borrowing today is for leverage so that we can buy assets like houses. And as we all know, that kind of borrowing creates debt bubbles and inequality, and that's not good for society. So, where do I stand? Is a debt jubilee a good idea? I think if you're asking that question, you're asking the wrong question. The question we should be asking is if some debt is harmful to society, what can we do to prevent bad debt from being borrowed in the first place? Let's treat the real problem, not the symptom. And an excellent place to start is for the government to get out of the loan guarantee business. When the government guarantees loan repayment, bad economics follow. Let's take student loan debt, for example. Inflation has increased 2 times since I went to university 35 years ago, and yet tuition has gone up 17 times. During that time, annual Canada student loan disbursements have increased more than 12 times. Do you see a trend here? Having the government guarantee student loans just encourages lenders and universities to increase the price. After all, the more you can borrow, the more you can pay, right? Government-insured mortgages are another example of faulty debt economics. Canada Mortgage and Housing Corporation, CMHC, a federal crown corporation, currently insures somewhere around $500 billion in mortgages. If you default, CMHC, the government, guarantees 100% of your lender's debt. They aren't guaranteeing your debt. If you default and they foreclose and sell your house and there's a shortfall, they come after you for it. But if the bank suffers a loss, CMHC covers it. Talk about inequality. If you could loan someone money to buy a house with the loan backed by the government, wouldn't you jump at that opportunity no matter what the risk? That's how your mortgage lender behaves. And just like with our tuition example, the easier it is to get a mortgage, the higher house prices go. And, well, the higher house prices go, the more people want to leverage their way into the housing market. A government should be in the safety net business, which means, well, the government can effectively manage the debt jubilee process through the Bankruptcy and Insolvency Act, but they should not be in the debt generation business. So do I believe in a debt jubilee? Yes, but it must be fair and transparent to all. We already have a decent system. Let's make it even better by eliminating the unfairness, like the 7-year student loan rule and the surplus income calculation that forces residents of big cities to pay more in a bankruptcy. And let's get government out of the debt guarantee business so that individuals and society can recover from our current financial problems. That's how I see it. That's our show for today. All comments welcome. Thanks for listening. Until next week, I'm Doug Hoyes. That was Debt Free in 30.